Hey, what's up? It's Ben here. If you're new to investing or stock investing, you might have heard of people talk about dividends and how much they're getting in dividends. But what do they mean and what are dividend stocks? In this video, I'll give you a simple analogy of what a dividend stock is. I'll talk about the dividend yield, dividend payouts, when you get your dividends, taxes on dividends, and a dividend strategy to use. To put it simply, let's say your friends open a department store that sells various products and they ask you to invest in their store so they can grow bigger over time. Fast forward a couple years later, they now have multiple locations and grew the business tremendously. Because their business is doing well and you have invested in the business, they decided to start sharing the profits with you and give you some immediate profits instead of just growing equity on paper. Let's say you were one of the many investors who invested and you only put up $100 for a piece of their business. Now they are paying out 50 cents in dividends to their investors every quarter who owns a piece of their business. And in the stock world, they will call that piece of business or company shares. So basically, you invested $100 for one share of the business. Going back to the dividends at 50 cents every quarter means that the total amount of dividends collected will be $2 a year. This means that the dividend yield for you will be 2%. So for every $100 you invested in the business or company, you'll get $2 every year if they decide to keep paying dividends. And hopefully over time, that $100 a share has grown in value as they grow. So this way, when you do sell the shares, you'll make money. So in the stock market, when you invest in a stock or a company and they pay you a dividend, they could be called dividend stocks. They basically reward their investors for investing in them, and this could attract more investors since it makes it more appealing to the market. Normally, when a company or stock pays out a dividend, it's in form of cash, but they could pay out via stocks if they wanted to. Now remember, a dividend yield is calculated annually, so if a stock says that it has a 4% dividend yield, then that is an estimate of how much you'll get for 1 year holding the stock if they decide to continue paying dividends. Now you might be thinking a high dividend yielding stock must be good, right? Well, that's not the case if a stock has a 15% dividend yield. The reason for this is because it's unlikely for a company to support such a high dividend payout every single year. Also, this hinders the company to grow in the future. In addition, you might see the stock value of a company decrease every single year, and if you are lucky, you might just break even on your investment. Because if you buy a stock that gives you 15% in dividends and the value drops 15% every year, you'll most likely just break even. Plus, you'll also need to consider the taxes you might need to pay. For me, the highest dividend yield I would consider is up to 10%. I made a short video talking about what is a good dividend yield to consider. If you like, you can check out my reasoning behind that. Also, normally, if a stock is paying a dividend, they might want to just continue paying dividends to make it more appealing to investors. Dividends could be paid out annually, twice a year, quarterly, monthly, or even just one time only. But oftentimes you'll see most dividend stocks pay out quarterly. And most stocks don't need to pay out a dividend, and by no means investors are entitled to dividends every year. Companies can decrease, increase, continue, or not pay a dividend at all if they wanted to. So yeah, but if you are a preferred shareholder, you'll know that you'll get your dividends first, while common shareholders will get their dividends last. So now you might be thinking, if you invest in stock, when do you get your dividends? Every stock is different, but there are dates and schedules to see when you'll get your dividends. I like to use dividend.com since it's free and it tells you the dates of the dividend stocks. Normally, there are 4 dates you want to consider for dividend paying stocks, but there is one date that is really important if you want to get your dividend, and I'll explain in a bit. For dividend stocks, there will be a declaration date, ex-dividend date, record date, and payment date. The declaration date is when the company is going to announce their intention to pay a dividend. The ex-dividend date is the cut-off date for the dividend. This means that if you want dividends from that stock, you must be buying or holding that stock before the ex-dividend date. If you were to buy the stock on the ex-dividend date, then you won't get the upcoming dividend payment. So this is why the ex-dividend date is so important if you want dividends. The record date is normally just right after the ex-dividend date, and that's just for the company to record who the shareholders are. Then you have your payment date, and that's when the investors will actually get their dividends. When you do receive a dividend, it'll be taxed, and this depends if they are ordinary dividends or qualified dividends. Ordinary dividends will be taxed at your normal tax rate, and qualified dividends will get special tax treatment, usually at a better rate than your normal tax rate, and sometimes no taxes at all. This depends on the company, the period you hold your stocks for, and how much income you make. But if you open a Roth IRA, which is a type of retirement account, and you start trading within the Roth IRA, then whatever you make inside the Roth IRA is all tax-free when you retire. I made a video on how you can become a millionaire doing that with a Roth IRA, and if you're intrigued by that, you can check out that video, link is down below. Now, dividend investing is considered a passive income strategy because you simply just put money into it and you get rewarded with dividends. And by no way it's one of the best strategies to invest. Everyone will have their own opinions on this. Some people like it slow and steady to build their wealth, and some like to be aggressive and buy growth stocks, high risk, high reward type of approach. For me, I like dividends and I like to reinvest the dividends to grow my wealth passively without all the stress. I mainly go for large stable companies listed on the Dow Jones, and that's just an index that tracks the 30 large publicly traded companies. So I know they'll be paying out their dividends consistently and also increasing it over time. If you're interested to learn more about that, you can check out my dividend growth strategy video and see what I'm investing in. So there you have it. These are the basic things you need to know about dividend stocks. Oh, and one last thing, in order to start investing in dividend stocks, you need a brokerage account or investment account to start buying and selling stocks. If you haven't opened one, you can check out Robinhood or Webull since they give you free stocks. I made a comparison video about them, and also for Webull, they give you crazy random stocks for just signing up. Sometimes they give you 2 or 4 stocks if you just sign up with them. Links are all down below if you want to check them out. I even have a step-by-step video to help you sign up if you don't know how to get the process going. But anyway, hope this video was informative, and if you like this video, feel free to give it a like and maybe consider subscribing for more weekly uploads. I'll catch y'all later.